Well, again, let's stick with Apple because many investors are viewing Apple's Worldwide Developers Conference and that expected AI announcement as a catalyst for the stock. Now, increasing competition in China, waning demand, along with patent and regulatory battles, that has actually weighed on shares in recent months. The stock is now just above the flat line on the year, lagging far behind many of its big tech peers. So how should investors be considering their positioning in Apple with this upcoming announcement in focus? Here to answer that question and more, we want to bring in Kim Forrest. She's Bokeh Capital Partners founder and chief investment officer. Kim, it's great to see you again. So given what Dan was just telling us, what we have in mind that we're going to be hearing from Apple, if they do announce some sort of initiative on the AI front, which seems like a sure thing almost at this point, how big of a catalyst is that going to be for shares?
Sure. Well, I mean, that's what investors really have to make their mind up about. I guess for the developed world and the wealthiest people in that developed world, Apple is the go-to appliance to keep you connected to, well, everything, right? And it has to be fresh and new and wonderful to get people to now spend over $1,000 for a new iPhone. And with each release, they keep getting more expensive and people keep holding on to them longer. And that's the problem. At the end of the day, even though Apple sells services, they sell hardware. So what I think Wall Street really wants to see are compelling reasons why somebody would trade in a perfectly good phone for this new AI-enabled Apple. I love Apple Intelligence or Apple, whatever the moniker is, but AI, at Apple. I think that is what the driver is. And if you think that's going to happen, maybe you should buy shares if you don't own them.
Well, Kim, as you just said, that is the big question, right? Are me and Shauna going to run to upgrade our phones early because of AI-powered emojis? I don't necessarily know that we are, right? So what are you looking at in your, Apple's one of those names that you put so much personal data into when you're talking about it, but what are you looking at in your formulations to suss out the likelihood of this really driving more demand for Apple?
Sure. Well, I think we all have an idea of what the perfect device is that we want to use. And most times we get to talk to it and it talks back to us and it gets us answers. And Siri really did kind of push that envelope a whole further than anybody else had, especially if you consider it was on a phone in your pocket. So imagine that. But I think this new version of Siri is going to have to work across apps on the not just Apple apps, but everybody's apps for it to be really meaningful. And that's why they're putting this out today at the Worldwide Developers Conference, is to get all the developers excited about using Siri to be able to allow the end customer to have that really great magical experience of saying, let's just pick something out of the air, hey Siri, where should I have lunch? And can you order that lunch for me?
Kim, when it comes to what Apple has done in the past and using just history as a guide, some of the concerns surrounding Apple stock and the fact that they have been late to the game when it comes to AI, are some of those concerns overblown at this point? And I guess to what extent do you really see where Apple is trading now a real buying opportunity?
Sure. Well, I think I wouldn't say fairly priced, but it certainly has recovered from earlier this year. And yes, there was a huge penalty that they didn't have those two letters being thrown around with respect to Apple, which is AI. Like anything earlier this year that had AI enabled, or maybe it's been over the past couple of years, the AI importance as a buzzword has been growing. So I think they have been penalized. I would say that they've had some real issues. You brought this up in the intro into this piece about China. China has been a tremendous hurt to this company. A little bit could be political because of the tariffs and all of that fallout, but some of it was honestly just better homegrown, probably cheaper options than Apple. Now, that being said, Apple really does excel at the consumer experience. So I think if you're going to be a long-time holder, which we tend to be, our typical hold times are 3 to 5 years. So looking out in the future, I think Apple has a nice runway ahead of it. And maybe on a sell-off, you should add some shares or initiate a position if you don't have any.
Well, Kim, this brings me to a point that our tech reporter who's on the ground in Cupertino brought up that I thought was so apt. He said that they might be giving Wall Street what they want today, but not necessarily consumers. Yes. So I'm curious from your perspective, how much of a risk is it if Apple is able to please Wall Street today, but they're not pleasing consumers?
I think that that's the whole point behind today, because consumers don't tune in to the Worldwide Developer Conference,
Yeah.
right? It's Nerdapalooza for Apple developers, which is a good thing, okay? I mean, I'm making light of it, but this is a Wall Street focused, but really for the developers, getting them excited about putting their company's money, time, and effort into building out even more of their platform on Apple. And that is what this is the whole deal, the whole focus for Apple and the developers are, tell me more, why should I be in your ecosystem? So I think it will be a perfect thing, even if consumers yawn at this. What they really want to see is probably in 3 to 4 months' time, a new product, a new iPhone that has some of this enabled and is exciting for customers.